Well, good morning, everyone. Welcome to our Monday morning trading room. I hope you had a very enjoyable weekend. Today, Monday, of course, also solar eclipse day here in North America. Big deal. It's going to be this morning, solar eclipse. I think it may even end up affecting the market a little. So a little something to bear in mind as the morning goes on, or I guess depends what part of the world you're in, the afternoon goes on. All right, so let's see what's going on here from Friday's session. Friday, the market finishing on a little bit of a bearish note, pretty quiet through the Monday morning start here, and the Globex opened just about where the market left off on Friday, so no gaps or anything to consider. Our trading band a little bit twisted. This, of course, on the NASDAQ. For those of you new in the trading room, please don't hesitate to request markets if there's something you would like to see. Okay, right now I'm just going to give them a few minutes to kind of get their bearings because they're still trading within Friday's range, and it's still early. We're only a couple, it looks like we're about 4 or 5 minutes into the session. All right, well, we're getting a first micro-macro cross lower here on the Hawk. We're also getting a, I guess that's close enough. You can call that a hard edge bounce. If you don't want to call it a hard edge bounce, it is a trend change signal here in the Eagle. So the Eagle also looking bearish. The Falcon starting to turn over a little bit. And the Raptor struggling somewhat to follow through on this hard edge bounce right out of the gate. Oh, excuse me. Oh, I think I might have been sitting on my mute button when I just went over that. What I was pointing out was the Hawk was trying to get a little bit bearish here, as was the Eagle. The Falcon had just turned bullish, and then moving here to the Raptor, it was struggling here with this hard edge bounce. But like I said, it's still a little bit early. We are producing a counter trend signal. So if you wanted to get a second push entry, you could buy above this bar right here, that one that was forming. That was kind of your hesitation bar. Oh, you're getting another one. If again, we're starting to get a little bit late for our entry here. Ideally, the entry was here, and you can see we would have hit our high probability target already. So a couple of opportunities to get long. Here's a first micro macro cross signal that you could take, and you should probably cover it at least below this swing. And I may try to run this one out. You know, it's still early. The market's still looking for direction. So there's a first micro macro cross signal on the hawk. You had the counter trend signal here in the raptor. You had a very, very quick trend change signal here in the falcon. For you raptor traders, I know there's a few raptor traders here in the room. Now that this market has rallied a little bit, we're going to be looking for that cloud crossover signal. So there's going to be a little bit of a pullback here. The clouds are going to cross, and you can see we're starting to print a warning dot. So buyers might get busy here early. So we may produce a cloud crossover signal. That's the number one signal. Okay, so we've made a nice little advance there. I'm going to pull my trade to break even and just hold it there for a moment. And hopefully the market will continue a little higher still. And then I will move into a more aggressive stop strategy. Come on, give me one more push. All right, they're hesitating a little bit. I'm getting a little bit nervous, so I'm going to bring this in rather tight. There you go. That's all you get. All right. I at least got my little scalp profit out of it, and it may turn out to be a little bit too aggressive, but the way the market's been lately, it's almost one of those situations. You just take what you can get. And now we're just watching and waiting. on the Raptor, you see here's that #1 signal that printed the cloud crossover. Did we get to the profit target? I think we might still be working that trade a little bit. If you're running an auto break even, you may have tagged your auto break even. But this signal could well develop into a hard edge bounce as well. It could come back here a little bit deeper, hit the hard edge, try to rally one more time. So that's something to keep a lookout for. All right, back into the hard edge. So when the market encounters the hard edge of the band, we anticipate some sort of reaction here. So that's what we're on the lookout for. See what kind of reaction we get. Big block of selling going through the market right here on the Geiger counter. Here on the E-mini Raptor producing a hard edge sell signal and giving us a second push opportunity, which is interesting. Now, I should actually be covering the trade up there, but we'll see how this works out here. So the E-mini getting a little bit ahead maybe of the NASDAQ. I'll put this back on the shelf for now. So here on the NASDAQ, we've already got a first micro macro cross lower printing, so there's a sell opportunity. The Falcon working a possible trend change, and the Eagle's just a little bit of a mess right now. You can see Trade Manager says we are in full-on scalp mode, hopefully moving into trend mode in a couple minutes' time. Okay, here now the hard edge bounce that I've been anticipating. So we're into the hard edge. We're going to come out. If the market has enough in it, it's going to try to bounce here and give us a buy signal. There it is. Can I cover down here? Nope. Let's try that again. Can I cover, say, there? Yes. And what you can do, this is a good opportunity for a second push as well, where you can just use that current bar as your signal bar. Okay, so you can see our trade struggling here a little bit. My upside target, I would go with that. The primary resistance line right here, that seems like a reasonable enough target to try to ride out this little swing, but we are getting a counter trend signal. So this little rally here may well turn into a test of the extreme. That's always a little bit of a danger when you're taking a trade where the peak, here is so close, similar to this hard edge bounce that came right out of the open. It was so close to the low that there was very little opportunity for follow through. This one, at least, I have a little bit more room. Get another bar or two in my favor, I should be able to roll my stops up a little bit. In fact, if the market doesn't begin cooperating, I will consider bringing my stops up a little bit sooner here, but the market owes me one more push, I think, to the upside. So I'm doing my best to be patient here with my stops as we get closer here to the 57.94 area. We should see a little bit of buying try to come back into the market. And if I can get one more bar here, one more bull bar, I'll probably bring my stops in below this low right here. Well, they're really working that. I might bring my stops up right now, actually. Just take a little bit of risk out. Yeah, okay, so they're not that keen on heading higher right now, so might as well get out. All right, and you can see we're really getting a mixed bag of signals here. Now we're producing a cloud crossover signal. I would almost argue that's a little bit of an early cloud crossover, but at any rate. The market's not going up. It may well want to go down. I'm a little bit late on that signal now. Well, I do expect this signal here to give us a little bit more follow through. So if you're short that number one signal right there, you should be in good shape. You're just about to kiss your profit target. There you go. Oh yes, all right. So it's looking like we might be more bearish today, do you think? We've just broke the high of the morning, or pardon me, the low of the morning, so you can anticipate a reaction from that, to be sure. And our trend mode obviously not lasting very long. The market just cycled right through the trend mode, moved into swing mode rather quickly. And then we're back into scalp mode. So it's going to be a bit of a tough day here today. A lot of little sideways type trading. I don't know if I'm ready just to hop in any old place. I would like to see a little bit of a pullback, as I think a lot of traders may be holding out for. But, you know, sometimes you just need to get on board. Like, for instance, here on the Raptor now, you're just getting a continuation signal. There's a nice little second push opportunity. You'd have to risk it at least to the hard edge, I think, because, of course, if we get a pullback, that's where the market's going to go, isn't it? It's going to go into the hard edge. So placing your stop anywhere closer like that is probably going to be a little problematic. All right, well, let's just put this on the shelf for now. Sellers, I don't know, they seem to be struggling here at the low. See how the hawk is starting to drift a little bit sideways. We're getting a similar look here on the Raptor. We're into the low of the day, we're into the primary support, and all of a sudden we're starting to drift sideways. Now that's not unusual when the market hits a significant support or resistance area. Here on the Falcon, you can see we're starting to produce a lot of buy signals, warning dots. No completed buy signal yet. That would be a double dot entry if you were looking to buy. And what you want to do is you want to look back at the recent history of the chart and find a support area. In this case, it would be the low of the morning that caused the market to rally. So if you're looking to do the early entry, the double dot buy, you always want to make sure that in the recent history of the chart, I think that's important, is that it's recent. You have some sort of reactionary move that you can say, yeah, okay, last time the market was at this price level, this is what happened. Here we are again. Therefore, we can anticipate another rally. Maybe. Right now, as I said, we're just getting warning dots. There is no completed buy signal just yet. And it is a counter trend move, right? You don't want to get hung up looking for counter trend moves all the time, because then, of course, you have a tendency to miss out on the bigger with trend moves. Okay, our E-mini signal, the hard edge sell, that we pointed out, working out very well. The market falling off quite nicely on that one. So a solid move there in the E-mini. All right, so we're getting that little bit of a reaction now. Off of the secondary support zone. You can see we hit it almost right on the number, just came up one tick shy. We're getting a little bit of a pullback. I don't know, we might actually get a number 2 signal out of this. A little bit of a counter trend move, perhaps. So we're back here testing these lows. Uh, 57.72. That sounds familiar. Uh-huh, that's why. So that's near Friday's lows, where we're at right now. All right, so speaking of the double dot signal and the counter trend signal, so we've got a double dot buy signal here in the Falcon, and you could use Friday's lows because that's where we're trading. You could say, well, Friday's lows caused a rally. Therefore, I'm going to look to buy on a move up here. Now, I wouldn't, I'm just going to sim this for you. Any counter trend move, I tend to only take a single contract. And if the market flinches here a little bit, I'll back off on it. But we should see a little bit of an uptick here. Come on, keep going. The thing with the nice thing about counter trend moves is that you definitely know where to cover the trade, right? You're going to cover it below that swing low. The downside to counter trend moves, of course, is that they tend to be a little on the risky side, probability-wise. Not as solid a move as a with trend move. Sorry, just trying to make some notes here in my trading journal. And we're getting a little bit of a bearish pushback now, which is what we would anticipate because this now is going to become a trend change signal, right? But we got in a little bit early off of the double dot buy. So the high of this bar here, a little bit of a big deal now as we get a little bit of a bearish pushback. If we take out the high of the bar, if we take out this 57.81 area, we see this bar form bullish or the next bar, we should see prices at least move back here to the primary support line. I don't know if we're going to get a full-blown pullback here to the median line, but the primary support line should be a very reasonable target. So now here on the Falcon, we're working a trend change signal. Here's the push that changed the trend line color from red to green. Here's the push back from the part of the sellers. And now to complete the trend change signal, we're going to need to see the buyers come back and produce a buy signal. And the trend change signal now getting spoiled a little bit because the filter is out of sync. The trend line has gone out of sync again. So you can see why it's so difficult to do counter trend trading. And again, that's usually why with a counter trend signal, I'll just look at taking a single contract because you're trading off, you know, a tighter stop for the lower probability trade. The probability is that the market will continue lower because that's the trend. But sometimes, if the conditions are right and you think there's going to be a little bit of a rally, a counter trend move, go ahead, throw a single contract on it, see what happens. Very often you will reach your profit objective. But that is why counter trend trading is so tough. And as I said, whenever you take a counter trend trade, of course, you're kind of blocking yourself from taking the with trend signal, which is maybe the worst part. We do have a market now which is, I would call it a bearish market today. We are in a downtrend. So the hawk had another first micro-macro cross signal here. The falcon now giving the trend change signal, and the eagle also a trend change signal. Now here on the raptor, we had that number 2 signal. That was kind of coinciding with that double dot signal that we had on the falcon, and it came right back with I would call this a hard edge bounce, even though technically we're a couple of ticks shy of the hard edge. The principle remains the same. The hard edge bounce, that's your number 3 signal, is a continuation signal. So in order to have a continuation signal, you first have to have something to continue, right? So it looks like we've got a trend. The market pulls back into the cloud and bounces off at the hard edge. That's what makes the number 3 signal work. If it comes up a tick or two short of the signal, well, the raptor will not print the number 3 because, of course, all the parameters aren't there. However, visually, you can still see that, yes, this would qualify as a number 3 signal. All right, the hawk here working now a 4-arrow consolidation signal. So we've got 1, 2, 3. Here's the 4th warning dot. This also a continuation signal. The thing with the 4-arrow consolidation, it does tend to be a very high probability signal. I don't like seeing these green bar cells come in. Oh, and it looks like they slipped me a tick on the entry as well. The green bar cell happens when the market makes a rather large retracement against the trend. It's actually starting to show some bullishness creeping into the market. Okay, and I'm going to get ready now with my stops. Here we go. Okay. So price is slipping a little bit lower, enough to find my high probability profit objective anyways. That's a nice thing about the hawk scalper, is it's not usually asking too much to find that high probability target. Makes for a easy little hit and run kind of trade, which personally I find easier on the nerves. All right, and here we're changing again on the hawk. We're introducing yellow bars, so that's kind of following up on this earlier green bar sell, how it started to make the market a little bit more bullish. These types of signals tend to develop near the end of a trend, not always right at the end, but certainly near the end of the trend. So I'm thinking we might get a counter trend signal here. This time it may have a better probability of success. So we've seen a couple tests of the low. Prices faltering a little bit. If we get a buy signal here now, I'm going to limit my risk exposure to just a single contract. Lots of trading going on now here at this 57, 64, 65 area. You can see the Geiger counter. Look at how it's waving back and forth. We've got a selling wave, a buying wave. Now we're pressing now into another sell wave. Wow, look at that block of selling that just making its way through the market here. That's crazy. So now we're going to see the market trail off a little bit from that. It's a very easy way to use the Geiger counter as well. When you see that big block of buying or selling, to confirm what you're seeing, confirm your signal. Oh, another big block of selling. But the buyer's starting to fight it back. See how we're starting to gain a little bit of bullish momentum. Not much. Wow, the seller's just having a field day today. Okay, now we're starting to drift a little bit sideways again. All right, a 4-arrow consolidation / macro pullback. Possible late filter entry signal here on the Falcon. There's a few things that are saying the market is obviously still bearish. I don't think the direction is so much the problem as finding where to get into or where to cover the position. That's the big challenge right now. Okay, the trend lines changed color, so that spoiled the late filter entry signal. But you really do need to cover this trade very, very deep. And that's kind of making things very difficult for selling, or I think so anyways, you know, to try to sell at this level. The hawk might give you an opportunity, but everything else is looking like the stops are just going to be too big. All right, that's why I'm kind of leaning toward the possibility of a counter trend signal. And there we have it right there. So we've seen the tests of the extreme being the low. We've produced the number 2 signal. The profit objective would be the hard edge of the trading band if you wanted to stretch it out a little bit. You could extend your break even a little bit as well. And again, it's a counter trend signal. It's a little bit more aggressive. I guess we're about an hour into the session, so this does tend to be the time if the market has a defined trend that it's going to try to reverse on itself, at least due to some profit taking. I don't think it's going to be a full-on bull reversal, but I think a little bit of an uptick, not out of the question. Okay, we got a little bit of buying going on. Come on, just get up there a couple of bars so I can get this trade to a break-even type position. 5770, 5772, that's where we had all that trouble earlier. Well, not trouble, resistance, all that activity earlier. Come on, get up there. Had a little reaction there to the hard edge. And the buyer's still trying to rally the market. Come on, let's get above. There we go. We got above 57.63. Pardon me. And now we would be at our high probability profit target if I did not stretch it out. And this is close enough for me to get this trade to break even. There we go. Come on, couple more ticks. Be nice. All right, the profits have been a little hard to come by this morning, so I'm gonna jam my stop in really, really tight. There we go. That's all they get. If they reverse there, well, I'll take the profit. But hopefully it will slip a little bit higher, get to that hard edge at that 57.70 area, and maybe even up to the primary or the secondary support zone of 57.72 3/4. Nope, not quite. But I did not feel like riding out a big swing, so I'll take the profit. I do expect the market to continue a little bit higher here, get closer to that hard edge. All right, gang, if you excuse me just for a moment, I will be right back. Okay, what did I miss? Oh, it looks like we're setting up for a hard edge sell here on the Raptor. And we're getting kind of a little bit of a mixed bag of signals. Getting a red bar buy here in the Hawk. The Hawk, of course, the scalping tool. It's likely to be a little bit more bullish or develop signals earlier than some of the other tools. The Eagle giving us a green bar sell. So some conflicting signals. I think the better opportunity is still on the short side. The problem remains the same given this big downtrend that we've had. I don't think the problem is the direction. I think the problem is covering the trade. Can I cover here above that resistance zone? Ooh, that's manual mode. That's not going to work. Because a pullback to the second hard edge, definitely feasible. You could take a second push on that signal right there and then perhaps cover the trade. Well, no, I can't get it up there. So I'm pretty much committed to covering it right there, which is a little not ideal. That's not an ideal setup. All right, we came back with yet another hard edge bounce. So technically this is now a double pullback signal. Those do tend to be fairly reliable, although normally I like to see a little bit more better spacing between the signals. I don't like to see them develop too quickly, one right after the other. Okay, so now we're back here into the hard edge, the second hard edge, the second cloud. Ooh, look at that. Big bullish push coming. Yeah, you see this trade needed to be covered, well, above the primary support line at least. Yeah, and there's the big pushback. No, darn it. They're going to tag me here in a moment. Good question here from David. David asked, Eric, would your stop be as large trading crude? Well, unfortunately, it would probably be larger. Crude oil, even more expensive. You see, the ideal stop, we're just going to pick a signal, say this signal right here. There is such a thing as a proper stop. And the proper stop is always above or below the last major swing. If you can't identify the last major swing, I usually go 2 swings back. So there's swing 1. This, by the way, would not be a major swing. This is a major swing up here. And that also happens to be your second swing. So you can see the risk exposure, it's substantial if you're trading a modest account. You know, if you're trading a $100,000 account or more, you can afford this kind of risk. What you're looking to do is you're looking to keep the probabilities on your side. We're not talking about risk-reward ratios. Rather, we're looking at keeping the trade in your favor. You cannot keep the trade in your favor if your stops are overly tight. I know it's no fun having a lot of money at risk, but placing your stop above the high of the last bar when you're looking to sell is it's pretty much like Russian roulette, financial Russian roulette. Yes, there's going to be times the market just continues straight lower or higher. But there's going to be more than enough times that you're going to get this kind of situation where you print the signal and you decide to put your stop right there. Yes, you only have $100 at risk, but the market stops you out and then goes on without you. Now I can already hear those of you saying, well, I'll just re-enter the trade. Yeah, okay, that's all well and good, but meanwhile, you're already down $100. So rather than take that initial $100 hit, why don't you just leave an extra 100 at risk? So rather than risking it here, what if you risk it up here? So if you would normally risk $300 or $400, why not risk 500? Because now you haven't absorbed that $100 loss, have you? And that's the whole point of running a stop loss order. I equate it to the child's game of keep away or tag. Right here, we're producing a sell signal. If the sell signal prints, it's going to print a hash mark right there. Where should we place our stops? Well, that high right there might be okay. Probably not. It's probably a little bit too close. So where do we go then? You know, this swing right here, okay, that's a little better. But you're not going to like the answer here. The best stop is still up here. Now this starts to border on those prices, even if you're trading larger accounts where you say, no, sorry, I got to pass on this trade. And that's what I should have done with my NASDAQ trade that I'm going to get stopped out here in a minute, is I should have said, nope, I can't afford a proper stop. The proper stop would have been up here. Therefore, I should pass on the trade. That's what I should have done. I didn't, so I'm going to get smacked here. in a moment, very likely, unless the sellers get very, very busy. Yeah, you got it, David. David says, yes, many times I think, I wish I made what I just lost. And how true. That was actually an early revelation for me. Before the days of cell phones, those of you who are old enough to remember those days, I remember looking at my phone bill one time and looking at all the long distance charges. You know, $20 here, $10 there, $30 here. And at the end of the month, I had like $300 in long distance charges. And each time it was an insignificant amount. And my telephone bill just kind of drove home to me the importance of little profits in trading. You know, we're so quick to absorb a little loss, aren't we? We're okay taking the $50 hit. We're okay taking the $100 hit. And yet, how many times do we pass the $50 profit or the $100 profit? And yet, those all add up, right? We're so silly as traders. Oh, I may have caught a lucky break here. You know, as I mentioned before, the challenge today is not the direction. We do have a bear trend today. The challenge today is all going to be about placing that stop so you don't get hit early. That's the tough part today. I'm trying to be I'm trying to avoid being too quick with my stop at this point because there should be one more bullish push here. The Geiger counter's been pulling over. Should be one more attempt to rally, and if the sellers really are going to keep control of the market, they should bring it down, and at that point, I'll start rolling my stops. So I've been fortunate enough to ride out this first swing, or technically I suppose it's the second swing. If the market makes a third push higher and fails at this point, then we're going to have that itty-bitty test of the extreme, right? And then prices should resume the downtrend. So that's what I'm looking for right now. And if I'm wrong, well, I'm going to get tagged. That's the chance I take. All right, here they go. There's that bullish push. Now let's see whether the sellers can knock them back down. So the test of the extreme, we'll see whether or not we can ride this one out. Otherwise, as I said, gonna get spanked. Come on. Come on, sellers. Oh my. What a what a tough spot we're in. Oh, darn it. I, it's almost looking like they're not going to let me get away with it. Yeah, Francisco asks, why did you enter way down here? Well, it was off this number 3 signal, this double pullback signal. But as I mentioned at the time, the problem with trading the market, with any trending market, we have a market that's in a downtrend today. You're going to be better off shorting than you are buying. The challenge is not so much the direction, rather where to get in and and where to cover the trade. That's the real challenge today. Where to cover this market so you don't get tagged prematurely. And it's going to require bigger stops, unfortunately. So we're bouncing around here a little. right, with a little bit of luck here, we will see the market resume the downtrend and get back down to my profit target. Darn it, they're starting to swing back. Well, my stop is held for the last couple of swings, so if it fails at this point, that's really the time to get out. Wow, really? I may actually have rode this one out? That would be something. Oh dear, almost spoke too soon. Okay, I could start to bring my stops in a little bit at this point, or I can just leave them where they are. After all this hard work, it would be disappointing to get tagged on a minor reversal. Yeah, see, Stephen, I know exactly where you're coming from. Stephen says to make 4 points with a 20-point stop. No way, Jose. For me, he says, well, that's why the trade manager will often tell you, no, you can't take that trade because it's outside of your risk parameters, right? That's why we control our risk here. We don't control our risk by keeping our stops ultra tight. Paul makes a comment, with a 14-tick chart, we are at 2 pivots back and the second support level. Woohoo! I'm guessing that's good. The market does tend to do things in pairs. I don't know why, but it just does. Let's see, for instance, here we had 2 pullbacks higher. And we will often see the market make 2 moves against a direction before trying to go the other way. That's why I said you'll sometimes hear me say the market owes me 1 more move. It's because it will give me 1 move, it owes me 1 more. See, if you're looking at swing points, you can say, okay, well, here's move one. The market owes me one more move lower. And it may flinch a little bit and come up, but it does owe me one more move to the downside here. Will it be a big move or a little move? Well, that I can't tell you. Hoping for a big move. Hoping for a move back to the lows. And in fact, I may take a more modest profit on this one. Let's bring my stops in a little. There we go. We'll take a $75 profit if I can get it. And we'll put the stop break-even trigger right there. Yeah, great question here from Elmer. Elmer asked, would you ever consider to get out somewhere in between after the number 3 and just after number 3 try just in order not to take the full hit? Yes, absolutely. So I think what Elmer's asking is after this number 3 signal, we get in, the market starts to go against me. Would I ever consider getting out early? Yes, I would. But as I mentioned today, the challenge was not so much the direction, right? I know the odds are that the market will head lower today. Why? Because the market is in a downtrend today. Therefore, I want to stay on the selling side as much as possible. The challenge is going to be placing a stop loss far enough away to avoid these types of situations, these kinds of pullbacks. I already mentioned to you the ideal stop loss would actually be somewhere near the high of the day. And that's going to be impossible for most of us. Therefore, I had to choose some sort of intermediate stop loss. The only way I can protect myself at that point is to rely on my risk exposure. So if I can keep my risk exposure to an amount that will not ruin my account if I'm wrong, then it's very much like taking a bet at a casino. I place my bet, I play the cards that are dealt to me, and I play them the best that I can. If I got crappy cards and I bust or the dealer beats me, well then I'm out my investment, but I was out that investment as soon as I chose to play, right? So as soon as you choose to hit your buy or sell buttons or you place your order, as soon as you hit that submit button, consider that amount gone. If you are not comfortable with this amount, don't play. Wait for another signal, setup that you are more comfortable with. And that's really the gist of trading, folks, right there. Is when you take a trade, as soon as you hit that submit button, consider this amount gone. It is gone. You have lost it. It will clear your head when it comes to making trading decisions. If you're worried about this amount that you have up here, you will not be able to think straight. Now, Elmer's point is valid, but then again, it's like my friend Tom Loge, who will take stop out after stop out after stop out, $40, $50, $60 at a time, and he'll take a half a dozen stop outs in a day. I've often said to him, Tom, why don't you just, instead of taking $5, $60 losses, why don't you just run a $300 stop? Chances are you won't get hit. Each time you get hit, don't forget, not only do you incur the loss, but you incur a commission and fees. But not only will you not get hit, but if you do get hit, you're no worse off. You're still out the $300. Plus, you may not have had an extra 6 commissions to pay for. I guess, you know, you have to find the balance for what works for you. I can only tell you how I trade. What works for me, trading, of course, is a very, very personal business. At the end of the day, it is your money. You have to do what you think is best. Now, personally, you know, if I can ride out the swing, if I can hang in long enough that the market will actually tail off here and perhaps hit my profit objective, then hooray for me. If I get a little bit of a downtick, I don't like the way the Geiger counter is pulling here to the bullish side, so I'm going to have to go with a tighter stop here, bringing in just a couple of ticks. And if I manage to ride out this next swing, I'm going to be more aggressive with my stop still. Because it's getting to the point where the sellers had their chance to regain the market. They failed. Now the buyers have got the ball, and it's a good chance they're going to try to rally the market up. If the trade doesn't work out, the trade doesn't work out. That's trading. Hopefully at the end of the day we win more than we lose. Some days we walk away even. See, 57.70, that's going to be a big number for the next few days. You know, maybe I should have been more aggressive on this leg lower. I could have been tagged out here somewhere rather than going to get tagged at 57.70. But I had my reasons, right? So long as you have a reason for doing something, you'll probably be okay. You don't want to be shooting from the hip all the time. Sometimes you're going to, you know, you're going to reach for the buy and sell market button. You're going to buy or sell for no obvious reason, and then you're going to be left to manage your trade. But so long as you have a reason for doing something, you'll probably be okay. All right, so I took a stop out there. I could have reduced it a little bit more had I been a little bit faster on the stop, but I had my reason for bringing it in, right? The market attempted to go lower, failed again at this point, at this low, and you can see I would have been tagged here at my full stop. So even though it was a loss, it is what I would consider a good loss. Was I happy losing the money? No. Did I manage the trade well? Yeah, I think I did. I saved myself $100 on the loss. But overall, I think I did about as well as I could on that trade. And those are the kinds of losses, those are the kinds of trades that aren't going to ruin you as a trader. You're going to take those, you know, little hits for $100, $200. Get used to it. So long as you don't, you know, start taking $1,000 hits and $3,000 hits and that kind of nonsense, you'll do okay. All right, boys and girls, I think we're going to wrap things up here for the morning. We'll give it another go tomorrow. I hope to see you then. enjoyed the eclipse. We've got a beautiful clear sky here in the Pacific Northwest. I thought for sure we were going to be clouded over, but it's going to be a clear day. All right, we'll talk to you later. Bye for now.